Financial accounting is really about measuring what's occurred in terms of the dollars and cents. I look at managerial accounting as what's occurred in terms of activities. You know, having somebody turn a wrench is an activity if that's something that introduces a cost into your equation. You know, having a certain number of people required to staff a retail counter is activity levels. So, you know, how many donuts you're going to sell, or how many coffees you're going to move, or how many pieces of computer software you're going to sell are key pieces of activity that drive how many people you need, and a lot of other things in your business. And that's more managerial accounting, that's operational accounting, that looks at your business more in terms of what are the operational drivers, as opposed to trying to capture the dollars that are a consequence of that activity, which is financial accounting. Managerial accounting is about how we manage the operations. In large scale manufacturing operations, there really is a whole set of records that are all about activity levels and tracking activity and doing managerial cost accounting. In most startups, for me, that's your monthly or weekly cash flow projection that you're running over six months. Understanding the drivers to your business, you know, understanding the key inputs. How many people do I need here? What's that going to cost me on a bi-weekly basis on payroll? What kinds of revenue do I have to bring in? You know, or if I'm going to increase, if I want to increase the amount of sales activity, you know, what's it going to take to do that? How many people do I have to bring in ahead of time in order to achieve those? And you can work those through pretty well in a fairly simple cash flow projection that I call managerial accounting as well.